Hello, good morning everyone. This is Payal ma'am here and I am your accountancy teacher. So far I have taken 2 lectures for 11th commerce of course. We have been doing chapter 1 from part 1 of your textbook, which is accounting and its terminology. It's a big regret that we are not able to meet in person because of the situation prevailing worldwide, and so we have chosen the path of video lectures, online lectures. Yes, and today is the third lecture for accountancy. In the previous lectures we have had an introduction about the very first chapter, which is accounting and its terminology. We have understood its definition and meaning, and in the second lecture we have studied about characteristics of accounting, which was financial characteristic, money as a medium of exchange, classification, interpretation, and etc. etc. Yes, I have also given you homework in each lecture at the end. I expect that you do your homework on regular basis and also you make efforts to study these video lectures thoroughly. So the third lecture, and let us see what is the topic for today. Yes, here it is on your screen. It is objectives of accounting. The previous lecture was about characteristics of accounting, and the topic for today is objectives of accounting. Yes? Firstly, what is accounting? We have understood this well in the previous lectures, that it is to keep the records, to classify, to summarize, and to interpret. Simply speaking, it has a particular objective, or say many objectives. It is very obvious that a task that you do, let it be any, has some motive behind it. Any activity done by you has some objective to be fulfilled. Yes? So let us see what are the objectives of accounting, of which the very first objective is to keep permanent records. Before going in detail, let me instruct you that you should watch this lecture till end for complete understanding. And also you should have gone through the previous 2 lectures before you watch this lecture. As you know, this is all linked. If you aren't aware of the facts presented in the first lecture or say second lecture, it is quite difficult for you to understand third lecture. Yes? So please follow the order. Watch the first one, then second, and only then the third lecture. Yes? Fine then. So objectives, or say functions of accounting, of which the very first objective is to keep permanent records. Seems very simple. Let me again highlight a point here. Objectives and functions are nearly same, or say one. Okay? The objective of keeping books of accounts are presented here, and they are given in your textbook on page number 4. The very first chapter. You should have your textbook with you. Otherwise, you can pay attention on the screen. Okay. The very first objective is to keep permanent records. In accounting, transactions and events are recorded in written form. What are transactions? We have understood this in first lecture as well as second lecture. Transaction is an exchange of goods or services in terms of money. We also had an example like you visit to a shop, you've purchased a pack of biscuit, the shopkeeper gave you the pack of biscuit and you have given money in return. Yes? This transaction can be measured in terms of money. This is an economic transaction for that shopkeeper. This transaction will be written by that shopkeeper in his books of accounts for the purpose of keeping a record. Yes? So every customer that visits to his shop, I repeat, every customer who visits his shop and the transactions which result in terms of money related to those customers who visited will all be written by that particular shopkeeper or say an accountant hired by him in the books of accounts. So it is recorded in written form. Once you write it down, it is easy instead of memorizing this. Yes, it is difficult to memorize how many customers visited a day. Yes? So the transactions are to be written down with the purpose of keeping a record so that whenever you need the information, it is available in future. Further, they say these records are kept either in the form of books or recorded in computer on permanent basis. You know this very well that nowadays the data is inserted in a PC instead of writing it down in the books. Yes, you must have come across a word accountant, a person working as an accountant. Yes, he or she is the person keeping the records of transactions or anything that is happening in the business, in the partnership firm, etc. Yes? So keeping permanent records is the very first objective of accounting. Once you have written it, it is available for lifetime. Yes, once you have inserted the data in PC, it is available whenever required. Yes, this is the reason you write down each and every transaction that takes place. Yeah? Alright, moving towards the second point. I am reading in your textbook and I have presented the head points of the same over the screen. You can keep your textbook along for a better understanding while you watch this lecture. Yes, it's a request you should have your textbook with you. Second objective, to know the effect of each transaction. Here they say each transaction has its effect on overall profitability or economic condition of the business. Thus, accounting helps in obtaining this information. You see, every single transaction has an effect on overall profitability or economic condition of the business. Of course, because these transactions are related to money, and when the transaction takes place, there is an inflow or outflow of money. Yes, this way it is having effect on the profitability or economic condition of the business. Yes? The economic condition of the business can be measured on the basis of the profit or loss that the business is making. Yes? During accounting year, which is of 12 months, which starts on 1st of April and is completed on 31st March of next year. We have understood this in the previous lecture. Yes? Fine then. Let us come to the third point. They say to know influential factors. I am reading in detail in your textbook. The information of factors affecting profit or loss as well as economic condition of the business can be obtained by preparing accounts. This objective plays vital role in the preparation of accounts. The factors affecting profit or loss. You see, any activity that you conduct, yes, that you carry out, you have something in your mind that how this activity is to be undertaken. What are the consequences going to take place in relation with this activity? You will obviously find out all the related factors, that what if I will be doing it in this way? What is going to be the result of this activity? Yes, and if the purpose of the business activity is to make profit, then you should obviously consider all the factors affecting profit or the factors which may lead to loss. If you study all the factors affecting profit and loss carefully, you can take better decisions on the basis of the records that you have. Okay? The next point here is to determine tax liability. They say the tax payment liability is determined on the basis of prepared accounts. Why? Because accounts prepared have all the numerical data, each and every data presented in the books, each and every transaction recorded in its books. And what is the purpose of doing this? The only purpose of keeping records is that you will get an idea that what is the total income at the end of the year, what are the total expenses at the end of the year, what is the position of your business. Yes? And the tax is to be paid on the basis of the income of a taxpayer, and an idea about the income is obtained from the records that you have in the books of accounts. Yes? And hence, the objective of preparing accounts is to determine tax liability. Yes? From the books of accounts, you will get an idea that what is the income at the end of the accounting year, and as you all know very well, the tax is to be paid on that particular income of a taxpayer. It is determined on the income of a taxpayer. Hence, the determination of tax liability is also one of important objectives of accounting. Alright, the next one is to know quantum of payables. Let us first of all understand what does the word payables mean. Yes? Understand? You know very well what are transactions. And if I am not wrong, you also know what are cash transactions and credit transactions. If I am not wrong, I gave you a simple example in the previous video lectures that I have that I have taken, say for example, I have purchased goods worth rupees 50,000 and I have paid 25,000 of which on the spot to the person who supplied goods to me. What are goods now? The items purchased by me, the items sold by the trader, the other party who has sold me. Yes? Goods can be anything. Goods is an item in which the trader is trading. Yes? So I have purchased goods worth rupees, or we can say a stock of school bags. Yes, of rupees 50,000 from a trader, of which 25,000 I have paid immediately and remaining 25,000 I will pay later. Yeah. So this is the amount payable in future. The 25,000 is payable amount. Yes. And the 25,000 that you have paid on the spot is considered to be the cash transaction, and the remaining 25,000 that I am going to pay in future is credit transaction. And many such credit transactions take place during the year. So at the end of the year you will get to know that actually what is the quantum of payables, the total amount you will get to know, because you have written in the books of accounts that how much amount is to be paid in future, how many credit transactions have taken place till date. So this way, if you are having records, if you have written down in the books of accounts, you will get to know that how much is the amount payable, what is the quantum of payables at the end of the accounting year. Yes? Now opposite to this is the next point. It is to know quantum of receivables. Now there are many people who will visit your shop. Say for example you are having a shop of handbags, I can say. Example can be of anything. We have considered it that of handbags. Now there are many customers whom you have provided these handbags, or in simple words I can say goods, on credit. These customers have purchased handbags from you on credit. That means they have taken handbags, purchased handbags but the amount they are going to pay in future. Yes? So there are many such customers. This is called business relations. Yes, you do provide on credit. Simply speaking, udhar pe provide karna. Yes, in simple language, I have translated it for your convenience. So at the end of the year, you will get to know what is the quantum of receivables. This simply means that how many of your customers are supposed to pay the amount to you. Yes, this is just opposite to the previous point that we have understood. Here you are going to receive the amount from your customers for the transactions that have taken place on credit. Alright? Next and important point, it is to measure profitability of business. The main aim of conducting any business activity is to make profit. Yes? It is possible that loss will take place. There are chances. But our objective is to make profit. Yes? So pay attention in your textbook. The significant objective of accounts is to measure earned profit or incurred loss for respective period. The measurement of profitability is made available by accounting. As I said, the accounting year, which starts on 1st of April and is completed on 31st March. During this 12 months, each and every transaction that takes place, everything is to be recorded in books of accounts, and at the end of the year you have to find out that what is the amount of profit that a business has made, or in case if there is loss, then how much is the amount of loss. Yes? You will get to know this only once you have the overall records of everything that has happened in the time span of 12 months, that is an accounting year. Once everything has been written in the books of accounts. Yes? These are just the theory concepts. These concepts are to be applied practically in the sums that we are going to start in the chapters ahead. So in case if you face a little bit of difficulty in understanding these things, stay out of worry. Just revise these lectures again and again for a better understanding. And once these theory concepts, when applied practically in the sums, will be 100% clear. So for now you need to study anyhow the theory concepts for chapter 1, which is a language of accounting, I can say. Yes? Fine, then let us see what is the next point. Yes, here you have on your screen, it is to know economic status of the business. You know very well the meaning for the word economic status. Yes? So let us read it in detail. I hope you have your textbook with you. At the end of the year, what is the size of liabilities, assets and receivables of the business can be seen from the accounts under accounting system. Now what are liabilities? What are assets? These are the accounting terms which you aren't aware of yet. These terms will be explained further in the lectures that I am going to take. But for now, in simple words, liabilities is an amount payable by business to outsiders, and assets, we can say it is the property of your business. Yes. And at the end of the accounting year, you can see the position of your assets and liabilities from the books of accounts that you have maintained under accounting system, or I can say from the records that you have kept in books of account. Okay? And as I said, assets is the property and liabilities is the amount payable to outsiders. And whenever the assets are more than liabilities, it is said that the good economic condition prevails in business. Yes? So in simple words, the solvency of your business, the economic status of the business can be known from this, because it highlights the position of assets and liabilities. And of course, whenever the assets are higher compared to liabilities, liabilities is the amount that you have to pay, and assets and receivables is opposite to this. Assets is the property of your business and receivables is the amount that you have to receive. Obviously, if that amount is higher compared to a liability, then it suggests that the business is in good economic condition. Alright? Lastly, the point here is to detect and avoid errors and frauds. This is again an important point. They say, by investigating prepared accounts, the accounts that you have prepared, you will check them. Investigating is checking them. The financial mistakes or crimes can be traced out. Accounting helps to prevent. I'm reading in your textbook on page number 5. And there might be the change in the page number if you are using the new textbook because of the change in syllabus. In short, the topic is objectives of accounting and I'm reading the 9th point. Alright? To detect and avoid errors and frauds. Once you investigate the records that you have kept, yes, any financial mistake or crimes can be traced out. Why? Because you are having an entire record of what is happening. It is easy to find out mistakes from the records. Accounting helps to prevent such kinds of undesirable events. And accounting maintains indirect control to avoid such errors and frauds. Yes? Simple example that I will give you here to understand this point. You are keeping a record of all the important points in your fair books in school. Yes, and there is a teacher who will check your books. Yes? What is the purpose behind that? Just to check whether the records are perfect, or is there anyone who has not written anything or skipped something? Yes, is there anyone who is cheating? Yes. So your teacher gets to know by investigating your books that who is trying to cheat, who has not written down the given work. Yes? Similarly, considering this point in context with the records that you keep in the books of accounts, once they are investigated, once they are checked, immediately one gets to know if there is any mistake committed in it, or in case if there is any sort of fraud taking place. Alright? So once you detect the errors and frauds, they can be avoided later in future. Yes? So this was the last and important point of objectives of accounting. Yes? So here we are done with our topic for today, which is objectives of accounting, and your homework for today is presented on your screen, that you are supposed to write down the head points once in your fair book, only head points, but you are supposed to read all the points in detail for a perfect understanding, so that you can write this answer in detail when asked in the question paper. Yes? In the previous lecture I have explained characteristics, and you were also supposed to write down the head points of characteristics in your fair book. Please maintain the order. Alright, then we'll see you all soon in the next lecture. Till then, Study the video lectures thoroughly, make efforts to study, and stay home and stay safe.